what it means, why even the name Islamic financing, why are we introducing it into our economy, what is it going to do for us, and how are we going to manage it? Is it going to be the new form of finance we are going to use? My guest will help me do this discussion, and I have with me in studio John Che, who is a financial analyst. John, you're welcome.
Thank you, and thank you to your good morning to your listeners.
Absolutely. And this thing of Islamic financing has come up. Recently, we saw the Bank of Ghana issue out some directives or some guidelines given to interested entities who are willing to apply for a license. We are currently told that I think one has applied. I think there are 4 who say they are prepared. I don't know whether they've applied as of today. Now, tell us, when we say Islamic finance, you are a financial analyst. What does it mean?
Okay, so in terms of Islamic financing, the whole idea is that it's a new model of financing that is supposed to be compliant with Sharia law, okay, in the Islam. And when you talk about Sharia law, you know, in Islam, they have some core principles underlying the use of money. Especially, they believe that when it comes to making money, it should come from real asset investment. It's not about you having money, you just give it to somebody and you are charging interest. So most often, interest rate is forbidden, and the whole principle works on something they call profit sharing agreement. Unlike the conventional system where when you borrow money, they just charge you interest. No matter what happens to you, you still have to cope and pay the interest and the principal. The Islamic financing believes that that kind of system creates a lot of injustice, especially to the borrower if he's not able to make enough returns on the investment.
Okay, so it means that from what you are saying, with Islamic financing, interest is forbidden.
Yes,
or in the Islamic religion, interest by itself is forbidden.
Yes, so you see, in Islam, they don't believe in money creating another money. They believe in, if you want to make money, you should get it from legitimate trade or asset-based investment. You see, if you look at the conventional system, you realize that you can walk to a bank and then you say you want a loan. They give you the money, they charge you interest, and they don't even care so much about what you are going to use the money for. All that they care is just to get, you're able to pay the monthly interest and the principal. Islamic finance does not work that way. It says that when you do it that way, it creates a lot of injustice, especially to the borrower, especially if he takes the money and is not able to generate enough returns. What happens? He can't pay the interest and the principal is going to suffer. There are a lot of people who borrow money and they end up even using the principal to pay the interest because they have not been able to get enough returns to be paying that monthly interest. Islam, in the Islamic region, they believe that is a lot of injustice. So let's motivate a system where people take money for legitimate trade, and if it doesn't go well, we share in the loss. It's not like when there's a loss, we leave the borrower to go and find the money anywhere to come and pay. If there's a loss, we will share. So it's basically based on profit sharing agreement and asset-based investment.
But isn't that one rather the injustice? I know, I think in Islam they call interest riba.
Yes.
And this riba is haram.
Yes.
But now, from what you're saying, isn't it rather unjust that you have your business, you came to me for money. Now I should be so concerned to join in your business. So if there's a loss, I participate in it. Isn't that also injustice to me?
To the bank or to the borrower?
To the lender, so that's the bank.
Yes. So you see, the bank wants to operate a system where if we are making profits, we enjoy the profit. If we are making loss, then we must also share in the loss. But you see, the investors in that kind of system understand these things. That, okay, we have given money to somebody.
What system are you speaking of? The Islamic system?
Islamic system.
Okay.
That we have given money to the bank to finance asset-based investment and legitimate trade. If the legitimate trade does not go well, we must also suffer some loss out of it. We shouldn't allow the borrower to suffer alone. So, for example, let me get an example. Let's say a business goes to a conventional bank, borrows money. The bank says pay 20% interest, maybe monthly. Sometimes even the money you are come to use for the business is going to take a while for you to start generating returns from that investment. The bank does not care. What the bank cares is that at the end of the month you are paying him the interest. Whether you are making profit or loss, there are some situations where the whole economy is not even going well. We witnessed that in the past, where 2022 the whole economy, was moving downward. The banks did not really care about that. You still have to pay interest as far as you have agreed on the interest. Yeah. And in Islamic finance, they believe that is a lot of injustice to the borrower. Let's share everything. And in terms of the injustice, it's both to the lender and the borrower. So let me give a quick example. For example, if let's say in an inflationary period where the businessman is making a lot of profit, but you have agreed on fixed interest, it's also injustice to the lender, because then what you are paying the lender cannot even pay up the inflation happening. So it's a win-win situation where the borrower and the lender, they all share everything that happens, and then everybody is happy at the end. Yeah.
So maybe let's go back a little for purpose of our listeners, just so we understand first the concept before moving to the intricacies. So we are saying that, or from what you are telling us today, Islamic financing comes from the Islamic religion.
Yes.
I presuppose then that in Islam as a religion, interest is not a thing that is tolerated.
Yeah. So
when somebody gives somebody money, even without the commercial system.
Okay.
Let's say one person lends money to the brother.
Yes.
The brother can't charge interest on it.
At all. Yes. And I think in the Christian world too, we have that same principle in the Bible.
Is it?
Yes, that you don't have to, you can't borrow money to a poor person and you expect that person to pay interest.
But how about the person not poor?
Okay,
because not everybody who borrows money who is poor.
Yes, but the idea is that the person lacks funds. That's why he's borrowing. So, and he's now going to use for business. Why are you charging me a fixed rate? The interest is about the fixed rate you are charging, that no matter what happens, the person must still pay that fixed interest.
But isn't that on the assumption that you're also using the money to go and do some business, which you also will generate some extra return?
Exactly.
So just give me a portion of that return.
Exactly. So the Islamic people are saying that, in terms of Islam, they are saying that if you make profit, let's agree on how to share that profit. If you make loss, then let's also share the loss. As simple as that. In the conventional banking system, if you make a loss, they don't care. Yeah. You still have to find money to pay the interest.
Yeah.
Otherwise, they will blacklist you and you can't borrow again. So you can see the injustice to the borrower. Sometimes there are a lot of things that happen in the economy that is beyond the control of the borrower. Look at the oil sector for now, when prices are going up. It's not the doing of OMC or BDCs to make loss. But once they face this challenge, they are likely to make loss. In the conventional system, they will tell you to see pay their fixed interest they charge you. But the Islamic people will say that you are making loss. So hold on to the interest. Don't pay anything. Even if the principal is even suffering, we will not worry you too much. So we will share everything equally and everybody is fine.
But in the conventional banking, when you're giving the money, you're giving a principal amount.
Yes.
You go and do your business or whatever you do, you come and pay the principal plus interest.
Whether you make profit or you make
not,
loss.
You still pay the principal.
You still have to find money.
And come and pay.
Exactly.
Okay, but in Islamic financing, where they don't charge an interest. But do you have to bring back the principal?
Yes. So you see, you are going to use the money to do business.
Yeah.
Once you do business, you are going to generate profit out of it. So once you are generating profit, we think you have already recovered the principal. So they will give you a number of years to be paying the principal. And also, there's no fixed interest. So the profit you are making, that you will share. So they can say that, okay, if you make profit, you take 80%, give us 20% out of the profit. Then afterwards,
we'll go into the intricacies of how how they. But we're just trying to create the concept. Now, how popular is Islamic financing across the world?
Yeah, it's very popular, especially in Malaysia, in the Asian countries, where we have majority of Muslims, and also the Arab countries. It's very popular there. Now, even UK, US, they are all trying to take advantage of it. And in fact, in 2008, the financial crisis, they realized that the Islamic banks were more resilient to the shocks than the conventional banks. You see, because the Islamic banks, they were financing real asset investments, not those speculative instruments that, people go and take loan and use it for. No, people take loan to even bet and all that. Islamic banks will never allow you to do that. They have some specific businesses that you can go into it, and you must always update them with what is happening. It's not like they are not only interested in the profit you are bringing. You need to be very transparent with your business, how it is going, and they even have experts that come to you to give you advice, especially in terms of business models and the rest.
Because they have an interest in
exactly it. They want to be they want to be a partner to your business, not just a bank that is only interested in interest will pay them. So in 2008, the crisis, all the crisis that have happened, we realize that the Islamic banks are more resilient, and there's no Islamic bank that has been bailed out by government. But we all know that, in fact, even recently, Ghana, our cleanup effort, we needed to bail out a lot of banks because they were giving loans to people and they didn't even have fair idea of what the money was being used for. And so history suggests that the Islamic banks are good banks for
They're
us.
quite popular. But do you know if in these Arabian countries, whether they have conventional banks there?
Yes. So they operate the two. Even the Gulf countries, they operate the two. And one thing you need to understand is in Malaysia is one of the leading countries in terms of Islamic bank, and about 50% of their customers are Christians. So it's not like they give the loans to Muslims, and most Christians also take advantage of it. And it's now even.
But that's an important point to make that. So it's not just financing for Muslims.
Exactly.
It's just the name of the
just
model
the
of
name
financing.
that they want to comply with the Islamic principles.
But it's for everybody.
For everybody.
Okay.
Everybody. And I think for me, it's very good alternative for us, because you see, if the banks realize that there's an alternative where they don't charge fixed interest, then I've been advocating for something called what do you call it? Performance-based lending. You realize that in our conventional banks, they do risk-based lending. So they assess your risk, think your risk is high, charge you high interest. But what they don't know is that when you do that, you are even adding more risks to the money you are giving. Because if, let's say, you feel the person is highly risky and you are still charging the person high interest, what does it suggest? So the person must do something to get enough returns to pay back. If this Islamic banks comes and they are bringing a new model where we are not interested in fixed interest, we want to share in your business, and most people, and assuming a lot of people are moving into that area, by all means the banks will restructure to compete, and that can even bring interest rate down further. So personally, I believe that it will work.
All right, I've been joined in studio also by McJordan Sika Nate, who is a senior research associate with Loris Africa. McJordan, you're welcome.
Thank you, and good morning to your viewers. Apologies for, being
Not a problem at all. Good morning to you too. So we've been talking about Islamic financing in Ghana, and John Che was telling us about the concept, about the fact that in Islam generally, the charge of interest, which is riba, is haram. And so they have found a way of doing business where they lend money without charging an interest. Is there anything you want to add to the concept of Islamic financing?
Yeah, I think I was listening to John prior joining in studio, and then even in studio listening to him, he's been sharing very great insight on the subject matter. I think he's done great justice to it, so I won't add much. But what I'll say is that it is a great form of banking for us as a people, especially given the quantum of funds that we need to grow our economy, right? And the fact that we keep singing songs along public-private partnerships, this avenue will come to complement existing banking system. And I think he makes a great point, right? The risk-based kind of lending that we have as a country haven't really helped much. I was looking at some data, as at full year 2025, the banking sector had total deposits slightly over 3 billion, right? And out of that, you have less than 100 billion in loans, right? That tells you, the danger ahead. So such a model like Islamic banking would really help us. And I think he mentioned another key point. We've been viewing it from just a religious perspective, where we're trying to think it is just for Muslims, right? But I think our counterparts like Nigeria has picked it up, and it's been quite impressive at their end. I think as at 2014, they had issued a Sukuk bond, right, over $3 billion, and that's great quite ample amount to help a nation grow. I mean, you can juxtapose that to our just ended IMF ECF. You know, it was just around 3 billion. So that tells you. And with that 3 billion, you see how we've been able to turn around our economy as a country. So that gives a sense of what an Islamic financing model can do for a country. So I'm great to be part of the show to unravel the deeper truth with this model and the pros and cons about it. Thank you.
All right. Thank you. Now let's look at, so having looked at the nature, now let's look at how it works in reality. So a person walks to a bank, takes an amount of, let's say, 100 million Ghana cedis. The bank does not charge an interest. The bank says, go and work with it. When you make a profit, I get a part of it. When you make a loss, I also get a part of it. Won't it then be a motivation for me to take the money, go and misuse it? After all, if a loss comes in the bank, you two share my loss. If I mysteriously happen to make a profit, I also will give you a little. Won't it rather facilitate people to misuse money?
I think it's a very good question, and I think most people are even thinking that way. That okay, if there's a new financing model where I don't have to pay interest, then I have to think maybe I have to find a way to get this money and enjoy. But you see, one critical issue about this Islamic banking is that they don't really give you the cash. You see, what they normally do is that what you are going to use the cash for, they try to get it for you. So it's not like it's a banking system like the normal conventional bank. You walk to a bank, convince them, I need money to buy a car, then they will just credit to your account and you go and use the money to buy a car. In the Islamic world, in the Islamic banking system, they don't do that. Okay, they actually finance asset-based investment. So if you want a car, they'll go and buy the car and give it to you to use, and they'll monitor the use of it. If you are doing business and maybe you need to buy the product, they will pay the product for you. So it's in rare cases that you are going to get the cash and go and misuse. Okay, they you see, the system in such a way that they are not looking at money creating money. They are looking at money doing real business that can bring returns. So they normally finance assets. Like they don't just give you the money. Whatever you want to do, if they will find a way to get it for you. So if it's a service, if you are paying your school fees and you want that, they will pay the fees. So they don't really. No,
but it's not the same thing. So
okay,
if the person, let's say,
and go and sell,
even that, or let's say I want to enter into, let's say, a warehouse business. So let's say they purchase a warehouse for me. What I'll be using the warehouse for, they may not know.
Yeah, I get
maybe
it.
I might have rented out some parts. My point is that, you see, for the conventional banking, because I know that I borrowed 100 million, I must pay that money. And I also have an interest of maybe 20 or 30% to pay on it. I have every obligation to ensure that I get this thing right. Rather than that, they are coming for me, coming for whatever collateral I used. Or if anybody stood as surety, they are going after all of them. Yes. But here that I know that, okay, if I make a loss, even they themselves will bear a part. It's going to make me lazy. Even if it's asking them to finance it, isn't it going to make them, yes, they buy it for me. And we know how things happen in our part of the world. They can buy me a car that I'm using it for, or let's say a truck. Next time they see I'm renting out the truck and just making my own profit.
So I would touch in.
Yeah.
So this model are actually, right, it's not an entirely new model, right? There is partly similar model running in Ghana. Yeah. Just that it's not Islamic banking.
Okay.
Because when you check the Islamic banking model, I mean, he's touched on it, and with now there's another model of banking, which we call the private equity banking.
Okay.
Right. Well, in private equity, right, which is falls under the umbrellas of investment banking, right? In private equity, what happens, and venture capital and the right. So you can draw insight from venture capital, private equity models, and then it gives you a sense of how the Islamic banking will run. Now, in those models, what happens is that, I mean, private equity fund managers, right? They notice target firms with great potentials and firms that can do well, but don't have the needed leverage to do so. They come in with what we call either private debt, right? They give you debt, or they come in with private equity, right?
But maybe just for purpose of those listening to us, can you help us understand what this private equity banking is?
Yes, so that's what I'm trying to explain.
Okay.
So, for instance, I'm a private equity fund manager. I identify, let's say, a growing business, right? A business. And I mean, it's a business doing well, but needs some push to increase the amount of profit they make or increase value, right? So I come in with a needed finance, but I don't just give the business the finance and go to bed. I give the business the finance and then run the business with the business owners as well, right? So if I give equity, I have part ownership in the business. Okay, so what happens is that people don't like it when private equity firm gets in their companies because they come with massive layoffs and the likes. And trust me, we look at these global firms on the US markets, like talk of these tech firms and the likes. Most of them had private equity backing from the onset. So when you go to the growth stage, they just list these firms and then invite other public guys in it. So that's the insights I would draw from it. So Islamic banking is not just going to be like, okay, you need it, we've given it to you. In there are going to be very clear assessments of these projects or real assets that you are seeking to finance. So I really like what the guidelines that the Bank of Ghana has so far put in place, because in the guideline you have sessions that talk about even Bank of Ghana looking through some of these products and understanding the viability of these products before they are rolled out, right? I mean, it is not same for what we are seeing in ordinary banking right now. Banks choose to lend to who they want to lend to. Bank of Ghana doesn't necessarily to do an assessment of various credit products on the market. You get it? So yes, it might sound like it, but there are regulatory backings in there, and also experts are going to sit on a project, understand the project and the cash flows that are going to come from this project or this real asset financing, and then that helps mitigate the risks when they notice risks in there. For instance, when they see a challenge with a particular cash flow for a certain years, they try to put in place clauses or other put in place measures to mitigate these dynamics. And I was looking at the data with Islamic banking, right? The bank that sector has relatively low non-performing loan ratio.
Okay.
Across board, you'll be seeing non-performing ratios in single digits below the required, single digit of about 5%. Right. For instance, in Nigeria, the two big Islamic finance players in there combined have, non-performing loan ratios below 2 to 3%, around 2 to 3%. Same for Egypt, right? So that tells you the amount of assessment that goes into this financing. So I don't think it's going to be easy peasy for the companies or the people who acquire this financing to just go to bed. So yeah, that's my take on it.
So then it means more that with this form of financing, they are also policing your business.
Yes,
exactly.
They don't just leave you to just go and perform and bring us the money.
Exactly.
They're fully involved.
Exactly.
But then is that not putting too much pressure on the lender? Because let's say if the lender is lending to, let's say, about 1,000 investors, it's going to police everybody's business. Isn't it too much pressure, John?
Yes, it is. And you see, the idea of one thing we need to appreciate is that the Islamic financing is also a bit rigorous. And transparency and all these things, as we are even scared of what people can use their money for when they get the asset. You see, the issue is that sometimes once you see something that is going to benefit you, we must all, do it right in order to sustain it. As far as bad players are concerned, they can, have their own way to, get the asset and do anything with it. But the issue is that, this financing model, you have been borrowing at a very high interest rate for over a long time.
Yeah.
Most often, the banks do not care what happens to you. If you default, they will run after you.
Yeah.
There's a new financing model that is telling you that be transparent with us. We will give you the money. Go and use the money for real business. Tell us your sufferings. If you are making loss, let us know. Then you as a customer want to also do things, against the lender. That is, principally, then it means that, in terms of even country behavior, it all comes in. There are some countries like maybe the Arab countries, you say, somebody will say, oh, they are more truthful. Even so, the white people are more truthful. And I'm sure that the Islamic banking product they are going to introduce here, they know the system, they know the Ghanaian society, and they will have a lot of, doubts and a whole lot of things. And that will even increase this policing cost that we are talking about. And so in the beginning years, it's going to, struggle a bit. But I feel if the citizens realize that this new financing model is good for us, we must embrace it and allow it to grow. I'm sure most of us will change our behavior and do the right thing.
But does it also rather put the lender at risk? Because in a part of the world, we are told a lot of businesses, some of the activities, they are for all kinds of reasons. Now, if the lender is now participating in their business, assuming, there's some business we had always thought is legit, and to realize that it's just a shell for maybe money laundering or some terrorist financing or something. Yeah. Again, isn't that a risk to the lender? Maybe let me take from Mike Jordan.
I think, it is a risk in that space as well. But like I mentioned earlier, right, that is why we have these guidelines to make sure that we are venturing into the right space. And I think we how the risk is also solved, right, comes from the education that we make, or education that is put out there for backing the sector, right? If from the onset the education makes it look like, look, you have an expensive system and there's this cheap system coming, and it makes it feel like a charity, right? Then I think it's going to increase something we call moral hazard in financing, right? That is why you even realize that with banks, our normal banking models, right, when they even write off a loan, the Bank of Ghana is still on the neck of these banks to still go after you for the loans that they've made provision for and written off. Provision for and written off in the sense that, when banks declare, let's say we have an agreement, you have to be paying this set amount of money or interest and principal at a particular point, you are not going to, according to it, it is declared as a bad loan, right? And their provision for it, that's smart accounting, they've already made provision for it in advance. But Bank of Ghana say, hey, despite making provision for it and slapping it against your profit for the year, whatever it is, you should still make effort to go after the people and then recover these funds. And I think I saw...
But is that going to mean that if they go after them, assuming they find it, they come and unwrite it off?
Yes, so we call something impairment recovery. So it was written off, and so it is recovered. So it's a slap back on the books. You get it.
So then why would they have to write it off in the first place then?
Yes, so that is from the banking and the bank and the lender's perspective, right? Now that's why regulations really matters. So from the bank and the lender's perspective, look, you have written it off, I can just declare it bad loan and just stop chasing after you, because then it becomes costly. But the Bank of Ghana says no. You should still go after them and then recover these funds. And I believe this same model that is, in our regulations to fight the moral hazard part of lending will be transferred directly into the Islamic financing. And that will help us, that will help the lender mitigate that risk. And also on the cost side, right? So we don't have a running like Islamic bank so far, but looking at the other models, right, or the other countries, I'm biased towards Nigeria because of how close it is to us in terms of most of our economic fundamentals, right? Now, in the Nigerian model, right, you don't just, I mean, like you said, if you have thousands of clients, it will be difficult going after them all. But how these models run is that there's a general product line, right? There's a general product line which has been really assessed. There are general criteria for the product. For instance, if you are financing SMEs in the agricultural space, right? It's a whole product that has been developed with funds earmarked for that particular in financing. So the assessment has been done on a broader level. So before you get in there, you are assessed, you go through the criteria, and for them, they're able to flag out the model or the guidelines that are outlined prior to the rollout of the product is able to flag you out. And I would like to, even from our normal banking model, I remember I was flagged out of a credit before, even though I'm working and I had a needed fund and stuff. What was it? It was because I was in the financial space. You know, from the banking sector cleanup, some of the banks developed like a credit framework that's shown lending to players in some financial sectors. You get it. And so it's able to do that work, and then it tames what we call the moral hazard part of it.
Okay.
On the lender's part.
Okay. John Jones weighing.
Okay. I think I mean we should not be too worried about I mean the lenders' risks, because I mean they are whatever is come to implement, whatever we are going to implement here, we have set up a clear regulatory guidelines and ways that, I mean, will predetermine who qualifies for any kind of financing. And I'm sure, I mean, it has been practiced as well for over a long period. If you look at Malaysia, it forms a larger part of their banking system. If you look at even the Gulf, I mean, the Arab countries, and it's working. It just, I mean, as I said, in Ghana here, I mean, history suggests that in terms of, we have a lot of risks, but I'm sure we will be able to come up with that.
Absolutely. I'm going to take a very short break. When we come back, we're going to look at now the specifics of how the lender does it. What form of financial arrangement would they enter into with the borrower for them to achieve their success? And it's still the focus on Z101.9 FM, your lifestyle, leisure, and business platform. Take a very short breather. When we come back, the focus rolls.
Z101.9 FM.
Emoji, emoji.
It's emoji, baby.
I got the fine thing. Me, I got the fine thing. My baby, fine. I tell you, this one be the fine. Every woman is a superwoman. Every woman is a champion. We know be nobody. If them know they our body. Yeah, hi. Chaka baby, do I'm soko baby. We no go hear nobody. Wa mukana ya no more. Messi Masula di Lumba. We be gone till November. Living up in a Bermuda. Other me slow, so I give me sugar. Hey, mama ya. Mama ya. NCO. Hey, mama ga. Everlasting. Hey, really would chaka, baby. Do I'm soko, baby. We no go hear nobody. One more can I hear no more. Anyway, shami no num for the corner there. No no masunami trimunami there. Ayalolo gakwese. Eko yenim baby gakwese. Mama ya. Mama ya. Enzi you. Mama ga. Enzi you. Yeah. Mini udo ide.
101.9 FM.
Everlasting. Yeah. Mini udo ide. Yeah, man. Everlasting. Yeah. We go do am chaka, baby. Do am soko, baby. We no go hear nobody. One more can I hear no more. Anyway, shami no num for the corner there. No no masunami trimunami there. Ayalolo gakwese. Eko yenim baby gakwese. Mama ya. Mama ya. Enzi you. Mama ga. Enzi you. Yeah. Mini udo ide. Everlasting.
101.9 FM.
Cross my T's and dot my eyes. Stress way, they my chest I ostracized. Do I treat you man, Robert, you smell the ties. Me and I dream be a yaka, I'm cutting ties. My jalabia tailor made, all customized. My English straight pigeon, all bastardized. What I for do? Ignore the bastard guys. I work, they snore, I pass those guys. Thank God it's Friday, of course my mind day. Rise and shine your eye, hustlers wait. All week long we hustle and slay. Trap the enclaves for wages and pay. Cooking in the morning, ensure that Vim day. Weekend so strong helps to shine the weekdays. Mommy say, son, well, God be praised. Well, these days, money be why we day some way. I bathe in faith, no bathe in apes. A basic case of faith in something great, but still, from 6 to 6 with stones and bricks, a building a future. I hope I live to see and shit. I barely know sleep, give me some way. Boys, I bread all week, give me some way. Boys, are living, no be cheap, give me some way. But thank God it's Friday. Maybe Jimmy did it, doom so, some way. Maybe I boy in so talk, give me some way. My woman boy, why dog, give me some way. But thank God it's Friday. Maybe Jimmy my gets, mini aje. During the week, I'm busy, mini adaje. But I still put in work, sick of dachi. I'm even out before the sun sets marching. So it's 5 on Friday, any achi. Make up verbs are quite nasi. Health is wealth, I give thanks, me dasi. My use my word as might to buy a sassy. Why wouldn't him say, hustle know they nap, hustle know they sleep, hustle know they slack you make wild on the streets, hustle know they vex, or stress about beat. RIP, laziness, lay a week. Dance with the struggle, got a million needs. We've been up in here along like Brazilian weaves. One of weekdays filled without brilliant deeds. Weekends we can enjoy what resilience breeds. I bathe in faith, no base with snakes. A basic case of me and fake know that relates. From 6 to 6 with stones and bricks. Build a future risque, shower stone and flicks. I barely know sleep, give me some way. Boys I bread all week, give me some way. Boys are living no be cheap, give me some way. But thank God it's Friday. Maybe Jimmy did it, doom so, some way. Maybe I boy in so talk, give me some way. My woman boy, why dog, give me some way. But thank God it's Friday. Maybe Jimmy see. Bug on my emre. Girls are bread, no be boys bed. My UB I'm on my head. Thank God it's Friday. Ha, bug on my emre. Girls are bread, no be boys bed. My UB I'm on my head. Thank God it's Friday. Let's be how we go do it. Me say, driving in a storm, I can't see shit. All week long, sink or swim, that's it. Staring at the clock, doesn't move, does it tick? Time moves slowest when you need it to be quick. Driving
Many thanks for staying with us. It's still the focus on Z101.9 FM, and we're still having a conversation on Islamic financing, what it means, and how it's going to support our economic growth. And before we went on the short break, we're looking at what risk there is to financial institutions who want to engage in this form of financing. Now we're going to look at what financing models arrangement the lender can enter into with the borrower. If we're saying that the lender cannot charge an interest, how can it work with the borrower so that it's able to obtain its maximum returns on the amount given? And I'll start with John.
Okay, so in terms of the financing models, I mean, in Islamic banking, they have about, 4 general ones. And I mean, there are some Islamic names attached to it. I don't know if I'll be able to mention the Islamic name well. I'm sure our listeners will judge. But they have something called musharaka.
Okay.
Now, the musharaka work this way. It's more of a partnership agreement where the bank will give you the capital and then you provide your expertise and skills. They will not interfere in your day-to-day activity, just that they will be monitoring. And you only agree on a profit sharing ratio in terms of maybe when there's profit 20%, 40%. So that one is predetermined, but it's not guaranteed. So what it means is that if you make a loss, the bank does not need to be compensated because you have made a loss. Means it's eating into your principal. So they will allow you, and then maybe they will see how you can restructure the business to come into profit. This whole idea is coming from the point of risk sharing. They believe, in the Islam, one of the main principles is that, when it comes to giving money, you should also share in the risks. You see, in our current conventional banking system, it's more of, they just, once they give you the money, the whole risk is on the borrower. Whatever happens, you must get money. If not, you can even go to court and you can be jailed. It's possible you did a legitimate business and it failed, but the conventional point of view, they will not understand you. Do you get it? But in terms of this one, if you make a loss and you come and show the figures, they will agree and find a way of, recalibrating the business to do well. Then they also have another one where it's more about joint venture, where you contribute capital and skills together. And then, so that one, they will be part of your board and be supporting you to do the business that you are doing. Okay, so in Islam, they call it murabaha or something. Then they also other forms where it's more of leasing kind of transaction. So you need an asset. Okay, you don't have, the bank will go and buy the asset and then they will give it to you and you are using. So as you are using, you are generating profit. You also share the profit with them. Are you getting? Then there's also even a bond, in the Islamic banking system too, they also issue bond. They call it sukuk. Now for the bond is attached to a real asset. Not the normal bond that when you buy a bond, there's a face coupon and like treasury bill, once 3 months, you're expecting your money. No, for this one, it's attached to real assets. So for example, if government want to do roads, then they'll issue bond based on the roads. And then they are supposed to, generate money from the use of the roads through road tolls. And then the money they will generate from it will be shared to the investors. So what it means is that if they are not charging the road tolls, nobody gets anything.
Okay.
And so there's a specific asset that is attached so that your coupon will depend on the performance of the asset. And I think it's good even for economy. We have seen a lot of, we go and borrow a lot of money and we come and use it for recurrent expenditure. I was even listening to the finance minister. He said at first we were using oil money to buy chalks. We were using that to take. I was surprised. Millions of dollars we were using to buy basic things. But for this kind of investment where it's attached to real asset, if you want to issue bond, you must explain what the bond is going to be used for, and you must monitor the performance of that asset in order for us to get returns. So that will make even the government more responsible in terms of borrowing. So I think if you look at all these various forms of financing, it's something that they want to partner with you. It's more of partnership agreement and profit sharing agreement where we all share in the profits if we're able to make it. If not, then we also share in the loss.
Okay, so it's more of the lender participating, whether by JV or
Yes.
joint venture or participating in your business or
Exactly.
partnerships.
Exactly.
But let me ask, so you have a situation where the borrower comes for the money, the lender, let's say they form a JV.
Okay.
Along the line, the borrower says, I'm not interested in the business anymore.
Okay, so basically, if I'm not interested, what they will do is that they will sell the assets.
Okay.
I mean, or get another person.
Okay.
Okay, so either they will sell the assets to recover their funds, or they will get another person who is interested to continue the business. But it's more of agreement. You see, it's more of agreement system. It's not like compulsory takeover. They will do. They will talk to you. You are not interested anymore. Can we hand over to? Because the money is not yours. I mean, they gave the money. So if you're not interested, either they will get a more responsible businessman to continue, or even sell the assets to get back their money.
But how about a situation where the borrower is just inefficient? He's not going to work. He claims he's working. He's not putting much effort into it. They can foresee the losses.
Yeah.
Would they also have to replace such a person?
Yes. So you see, most often for the Islamic banking, I mean, every time you're giving them updates, if they realize things are not going well, I mean, they will even stop along the line. Either they will get a new person on board, or I mean, they will not be interested financing it again. Maybe they will treat it as, I mean, money they have thrown away and they couldn't get return. I don't know if I've noticed. You realize that you see Arab people doing big projects in different countries. Like you see Arab people come to Ghana, establish mosques and the rest. Ask yourself, what is making this possible? It's the Lebanese and all that. It's based on this kind of financing, because they just walk to a bank. Oh, we have found a very good business opportunity at Ghana. We need this amount of money. As far as the Lebanese person knows that if I make a loss, I don't need to pay anything. If I share, the person is more willing to take that risk to come to Ghana to set up business. So you see big businesses in Ghana, because we don't have access to such financing. You see big businesses in Ghana being owned by the Arabians, and we are just here and then. I mean, so that's why I say it's a very good thing for us, so that we can also, I mean, take risks. And I think it's going to even increase the appetite for risk. Once you have a very good business venture, you go and, I mean, because a lot of people have been complaining. I mean, they have a lot of business ideas. They are not getting people to fund it. When they go to the bank and pitch it to the banks, they are not interested. But this is something that, I mean, if you prove that it's workable and they look at your projected cash flows, it's something good, they will give you the money. And that one, you are not scared, because see, you don't pay fees, interest. And you know, if there's a loss, they will share in it. They won't ask you to pay back the principal, because, I mean, there's a loss. So they'll just look at, I mean, the net, and then you will pay back. So this is even going to increase, I mean, the investment appetite of most Ghanaians to enter into big things. And I think that's the reason why the regulator himself is leading the charge to introduce this. And he knows that if he introduces this system, the lending rate, which he is hoping that it will come to single digit, will happen. Because that competition will also force the banks to lower their rates in order to compete.
Interesting. You seem very optimistic about this financial model the Bank of Ghana is introducing.
Yes, very optimistic.
Right. Mark Jordan, you kept mentioning earlier about some guidelines that the Bank of Ghana has introduced. Can you walk us through a few of them? I mean, what are they? Are the guidelines on the lender, or are they on the borrower, or is it on the bank that is entering into this arrangement?
Yes, so I think so far what we have is the guidelines on, I mean, the establishment. So clearly the lenders, right? The organizations that will set it up and stuff. So I think first of all, the guideline highlights the fact that you must be a body corporate in order to apply for such license. So I think that goes to answer the question that yes, our existing financial institutions, our existing banks can do that. In fact, even
so it means that like maybe Fidelity Bank or Cal Bank today can apply for that license to run Islamic financing.
Yes, they can under the model, under the guidelines. They can, to the extent that even your rural community banks, right, can also apply for a license under the guideline, right? So for now, what we have set out those items, and it's also set out how foreign participation is going to be like. For our local or our normal banks, the banks we have, there is a guidelines that prohibits 100% like foreign ownership and stuff. So you have to make sure that locals have a stake in there. I think same transfer to the Islamic financing. License as well. I think for that the key or the slight difference is the fact that there's a minimum foreign participation. If the license is going to be issued to a foreign body corporate, okay, then they should have at least 60% foreign stake, right, in there, which I don't see that with the normal banks, right? So right from the onset, I think the Bank of Ghana has done well. The guidelines is right from the onset trying to tackle structural issues, right, in the sector. One, it understands that it will be difficult for us as a people to just roll it out. So it's from the onset making it open so that people or foreign participants can also come in there and also have a feel. And for me, I think they are going to be, to some large extent, the people who really drive the space for us before our local guys probably will come in. So I think it's a great thing so far. And for me also, the interesting thing in the guidelines so far is the fact that the BOG doesn't just give you the license and then what you go do whatever you want to do as a licensed person to operate in the non-interest banking space. It closely monitors what you do. There's great supervision in there, and also the BOG per the guidelines, they even have an oversight over the various products that you issue as a licensee under the non-interest banking framework. Yeah.
Intriguing. But then let me again find out from you, in this space where we have a lot of companies in our country, they have no regard for corporate governance. They don't appear to pay attention to proper structuring. Do you think that this model of financing is going to succeed?
I think if we still stay glued to the old ways, then that will make it difficult to succeed, right? So it will be a clear yes. That is if our SMEs and our businesses do not, wake up to the call. And I think it's a great question you've asked, right? Because all along this while, the talks has been around the setting up of it and then having the lenders or the players come in, right? But we've had minimal talks around our SMEs or our businesses positioning,
Absolutely.
okay, to absorb the funds that are going to come from the non-interest banking, right? So it's a great thing that our SME, so if you're an SME person or a business listening to us, I think you should start working around your formalizing your business, because clearly, right, there's this talk about there's this saying that whenever we talk about finance, we think it is just money moving around, but the truth is that before money moves, trust and credibility must move, right? So I personally will be expecting business to really position well. One, your formalization, and how do you take decisions as business. It will shock you to know that some businesses, if you ask some businesses about their strategic, or their strategic plans or guidelines going into probably the next even 12 months or 24 months, is going to be a headache for those business owners. Yet those business owners think their business is so well to do and then they need support, right? So if you think you need the support, put in place the structures that will help you absorb this support when it comes in. If you don't have these structures and this support or these funds comes in, you are going to face hurdle in your general reporting to your lenders and the likes, right? We have businesses in Ghana making great revenue. But if you ask them, let's say, your revenue concentration where do you have most of your revenue, like some data about it, it will be difficult, and it will shock you to know that they won't be able to provide you with this data. And now we have systems in place that's able to help you take, customer details and the like. So our entreat our businesses, right, to really position well in that light, right? How you make money and even how they spend, right, is something that we really have to look out for. And you touched on a very great important point: corporate governance, right? Businesses should be able to put in place the right corporate governance structures that is able to guide the business into the foreseeable future. There are some businesses in Ghana today that, if the owners are gone, and these are not just tabletop businesses,
but many businesses,
these are very big businesses doing well, but if the owners are gone, the business just collapse.
Yeah.
Right. And I think that we've seen clear instances of some of these businesses that were doing well, the owners are gone, and then, we don't hear of the businesses again. Such posture, right, will not really benefit the foundation that our regulators, the Bank of Ghana, is trying to lay. All right. So I think it's something that we have to really look at.
That means that invariably, this financing model, aside from making capital available, will also then seek to structure businesses and put in right frameworks for businesses from their back end.
Exactly, right. And then even it will go a long way to help us, right, in terms of GDP data, aggregation and the likes. Then we're able to bring more businesses into the formal sector, right? It will even help taxation and the likes, right? And to some extent, even social security collection, our SNIT collection and the likes. SNIT is doing great well, covering the informal sector. But this model also go a long way to formalize most of our businesses, right? Sometimes when we talk about formalization, some business, we think you have to be there making the millions and the likes. And I'll give you an example. My mom runs a manufacturing business. We have about 3 segments. She's done cosmetology for a very long time and also been in the beauty space, right? And for one time, I realized she makes a lot, but you don't really see it. And that was me back then in my uni days. I'm trying to use my accounting 101 to help. Look, the hurdle I faced with even my mother, all right?
You agree? You tell that that's what I've been doing ever since.
Right? But thankfully, we've been able to structure most of the stuff, right? And when we did the structuring, we had, great financing from community banks, right? Because they bought in the idea and stuff. And thereafter, she saw the sense in, the formalization I was talking about all this while. So really, I think formalization goes a long way to help you the business, right? So we should embrace it well, and I think it will help. That's what will help the space. Other than that, leaning towards our old ways will not help the Islamic financing model in Ghana.
Yeah, John, let me again also find out from you. Now, we're talking of big players versus smaller players. Again, I don't know why this morning Cal Bank keeps coming to my mind. But let's say you have a Cal Bank, which is financing, let's say, an SME. Maybe its entire worth is about, let's say, 10,000, let's say 100,000 cedis. Now, it finances it. Is there no a fear that the lender, who is a big shot, may take over the business?
Okay, so I think one key thing we need to appreciate about Islamic financing is that is coming to, so there are some frameworks that the objective is to support SMEs. The objective is not really to take over, but to support them, especially when the conventional banking system is not helping, especially in terms of the fees rate I've been charging, and looking at the challenges that even SMEs face. They are not able to generate, enough returns to pay these loans, and they end up using principal to be paying the loan just to survive.
Yeah.
Now, if there's going to be a new financing model, I think especially what my colleague really, advised rightly, and I really love the advice that he gave. I think Bank of Ghana also needs to, I mean, let the public know that this financing model coming in requires proper structures and formalization. So this is where you have to even start, I mean, encouraging SMEs to be registered, to be formalized, to do everything possible, so that once this thing starts, they are qualified for it. Otherwise, this whole cheap financing system will come, and our SMEs cannot benefit from it. Are you getting it? So the whole, as I'm saying, based on the question you asked, the whole idea is not the bank. The banks are not really interested in taking over your business. In fact, if a bank is even participating in what you are doing, it's just to make sure you are always getting enough money so that they will share. So it's not really about, they are not interested in taking your business. If not, then by the time the whole thing ends, a car bank will be owning about 1,000 businesses. They don't have any business running typical businesses. They are in there to support. And as my colleague rightly said, every SME, this is the right time. You have been borrowing, you have been crying about financing, you have been crying about high lending rate, you have been crying about, you know, the former banking system not giving you the credit you need to do business. We have startup businesses, entrepreneurs always crying, looking for money. The system is coming. That system requires that you have strong structures. You are formalized. You are ready. You are ready with a good reporting system. This is the time to start preparing yourself to get all these done. Because there's a financing mechanism coming that will say, come and take our money, use it to work. When we make profit, we will share the profit. If we make loss, walk away. This is the best kind of financing you ever get in every place in this world. So just get everything ready. I mean, and when it comes, you will take advantage. And I'm sure that, as I said, that will even push the conventional banks to know that we are not happy with their risk-based lending. So they must also, I mean, move to partner with us to do well than always, I mean, looking. There are some banks, I mean, financial institutions that, I mean, will lend, especially the savings and loans, they will lend and let's say be taking 2.5% per month. Do you know what it mean? Charging 2.5% means? And they lend to SMEs. If you are charging 2.5%, what you are telling the lender, I mean, the borrower, is that in a month, at least you should make 2.5%. That's what you are trying to say. Now, looking at how much you're supposed to make to even pay interest, 2.5, then profit. So all these things fit into what? Inflation, and affects the whole economy. So as far as this system is coming, I mean, we should get ready, prepare to take advantage. And I'm sure if you do, it will seriously lead to massive economic growth. And I think that's why even Bank of Ghana is very aggressive on it. You know, he even set up a whole department just to promote it, because he knows the benefit that comes out of it.
But do you foresee Islamic financing taking over the financing industry, so that the conventional banking finance may be rendered obsolete at a point?
Oh, one thing I know is that when there's competition, there are new strategies. So I don't think the conventional banks will all just relax and allow the Islamic banks to take over. I'm sure what they also do is that they will bring nice products. That's why competition is good. Do you get it? They also even bring something more appealing. By the time you realize, they are also bringing products that are more appealing than even, because, you know, when people start making profit out of the business and looking at how they are sharing that profit with the bank, they will have a second thought. You get it? They will now be more interested in the first interest than, especially if the interest is low, than. So assuming the interest is, let's say, 8%, but in terms of profit sharing, you are sharing 20-80, you get to a point, no, I want the bank. So I'm sure the conventional banks, because outside, I mean, the Islamic banks are operating, the conventional banks are doing very well. And you see those banks with low interest, very low interest across the conventional banks in other countries. So I don't think they will just look on to be obsolete, as you are saying, but I'm sure they will also, I mean, as I said, when there's competition, people will strategize to, I mean, stay afloat.
Mark Jordan, when we were discussing the guidelines, I remember you mentioned a part on corporate entities. Does it mean that this financing will only affect borrowers who are companies? So let's say we're sole proprietors or enterprises. Do you think they can benefit from this form of arrangement?
Okay, I think it's a great question you asked, and that gives me the chance to really clarify on that end. So that was for the lenders, right? The
Okay.
lenders who will be given the license to
Okay.
do that. But in terms of customer base, of course, just like other financing models, it is actually open to I mean SMEs, individuals, and the likes. But yet again, like what we've been saying all this while, formalization and then I mean great form of understanding of your
Yeah.
business will really help these lenders. So we should embrace for that. And just to also touch quickly on what my brother was mentioning and the question he asked on whether we foresee this form of banking overtaking the conventional one we have already. I think right from the word go, what we have already, if you look at the talks, it's always been around how the Islamic banking has a cheaper source of financing and the stuff, right? But I think most of us are also not asking how they'll get the funds
Yeah.
to lend, and that's what is going to give commercial or
Banks
the
advantage,
conventional guys
yeah.
the upper hand for a longer while. Because how do they mobilize funds? Yes, they mobilize funds through their, I mean, CASA. Savings account, current account, savings account, long deposit, fixed deposit, and the likes. Now, the ordinary Ghanaian I know, right? Imagine if you see two banks, your GCB and let's say another, or let's say Bank A, right, who is a conventional bank, Bank B. You know how they deploy their assets. They deploy their asset into through the Islamic or the non-interest banking realms, and you know the other. I mean, as a depositor, you might be quite skeptical, and usually you lean towards the interest banking guys, right? So really, with that alone in place, a conventional bank will always have that mover advantage. So because of that, it will take a long while. Mind you me, as we speak, our conventional banks already have over 350 billion Ghana cedis in deposits. You are now going to start from fresh. It will take time. What I see is a complementary role from the non-interest banking, and I think my brother has really touched on it, how it will really help to beat down interest rates, and it will also help us to align interest rate dynamics to macroeconomic dynamics. You know, we learned in textbook that interest rates are really determined by inflation and some other premiums, right? It's unfortunate, and then we also learned that inflation is the highest bit of it, but it's unfortunate that's not what we are seeing. We currently have inflation as low as 4%, below 4%, but I mean the average lending rate is still up there, right? So it will help it. I see a complementary role rather than it taking over.
Okay, but then with our SMEs and businesses, do you think they know of these financial models? Are they? Is it well understood? Because I'm sure for a lot of people listening to us today, this is the first time they are hearing of this form of banking or financing. Do you think there's a lot of education in that regard?
As a people, we haven't really learned a lot about it. And let me tell you the truth. It's even bad to the point that you can have someone with a banking and finance degree from one of our top universities, and the person had never learned about Islamic banking, right? That's how it is, right? And so we really need massive education, and I mean, kudos to Z Media for leading the charge. There's a lot that you could have talked about today. I scrolled through a number of media. I mean, we're all talking about the waters, and still given the recurring ideas that we've been saying every day that no one is listening to, but you took it upon yourself to go this route today. So kudos. We'll need more of this going forward. Very insightful education around the new niche in the banking space. That's the non-interest banking. And so I'm sure maybe the BOG hasn't really been up for it so far because it is still in the setup stage. When it is up and running, we'll hear a lot. But it will be great to even start hearing it now, so that when it is up and running, it just the people understand. So I'll say it's a no. Our SMEs don't really understand this model well, and we'll need great education for them to understand it.
Yeah, because I guess if they don't really understand, the person's mind will be that when you come into my company, you are taking it over.
Yeah.
And we've heard of stories of some investors who do that. They invest into your business. You wake up one day, realize you are no longer even a director in your company.
Yes. So I think that's another thing that businesses will really have to look out for. Putting in place the right structures. I mean, reading their documents well before undertaking any investment agreement with any investor. All right. And also, businesses should be aware that, I mean, as a country, our businesses are regulated by the Companies Act, right?
Yeah.
So, I mean, having really great understanding of how this act works also help you to know whether the takeover someone is claiming over your business is a legal one or not, and then you can, I mean, take the person on, right?
How many of these will have enough money to go and litigate such a thing? You know?
Yes, but you know, I think we always I think the way we are looking at SMEs, we are looking at it from a wrong, like not the best of light or perspective, right? We're always seeing them as small there, so they can be cheated and the likes. Even with the rates at the bank, you know, last week I was telling my colleague after the show last week, I was telling him about how some of we are talking about how there's been economic transformation. We are not feeling it. Look, if we don't have the right businesses or the right people running businesses, it will be difficult for them to pass on macroeconomic gains to the microeconomic players, right? Which are largely households and very small businesses, right? So we really need, and for me, it's a plea to our SME guys. They are really doing a great job already. I think over 60% to 70% of our GDP is powered by these SME guys. They are really doing great, but my plea to them is that we beef up our works around it and understand how our businesses operate, and even the ownership structures and the likes. It will help, and read the documents well. It will help save a lot of time in the future and unnecessary takeovers from some investors. Yeah, absolutely.
John, maybe let me just come to you about my last but one question. In all of this, after government has, through the Bank of Ghana, put in structures in place to get this financing model running, does government have a role to play in creating that viable economic space for because if they get the money, but they can't invest it into any good sector or industry, it becomes worthless. And at the end of the day, everybody is making a loss. Does government have a role to play ensuring that now when they get the money at the back, when they go onto the field, things are actually running, that they can recover their money or their profits?
Yes, I mean, as for governments, in everything, they have an important role to play because, I mean, they are the big players through regulations, through, lot of utility expenses and all that. I mean, we see, what I can say about government support is that, I mean, you are bringing a new financing model, and I'm sure the motive is to really help SMEs and maybe help new entrepreneurs and the rest. So you need to also create that, good business environment for us, especially in terms of, the macroeconomic variables. We still need to keep the figures, good, to make it easy for, demand to be created. Okay, because if you want to create demand, your expansionary policies or contraction policies, like these kinds of road projects, you have to find a way to partner SMEs. I'm sure maybe even if some of these these big push projects that are ongoing, if we partner with SMEs to also, they don't have big machines and the rest, but if we can partner with them to also do the small works, people can go and take these monies and go into such projects. Because government is, we are the highest spender no matter what you are. So you can be more targeted in terms
Yeah.
of specific projects that you want to encourage, agriculture, tourism, and you are directly promoting certain, industries that people can easily venture into to do business. When it happens that way, people can take advantage of this new financing model to, also tap into such opportunities created by government in order for us to see the benefit. If not, the new model will come and then we'll still do the business as usual. Those ones will not provide any meaningful returns. But once government decides that, okay, this is a new financing model, it's about profits loss, this is a sector I want to promote, you create that enabling environment for people to, go into it, to partner with, lots of SMEs, and you give some government projects to them. Because, if you assuming government give about 1,000 projects to SMEs, you see the benefit, the employment that will be created, the addition to the economy that we are going to see.
Yeah.
So government, as for government, it has a very important role to play. In fact, I would say largely, the success of this new financing model also depends on, the actions they take, and we should be more targeted in helping SMEs grow.
Right. That's a contribution from Nanao Safwe J. He says, Kudo Z, listening to you live from Koforidua. But Jordan, I think he asked you a question. Please, when you say SME should get ready, what exactly do you mean?
All right. So when I talk about SMEs getting ready, and so this model is going to make funds largely available to SMEs, right? But from all what we've discussed, it is clear that it is not going to come as free money. And given the fact that it's going to be risk-based, the lenders from their perspective will really also have to understand your business, what you do, how you make money, how do you generate cash as a business, right? They are going to look at those key things. And looking at those key things, you are going to provide them with that data, right? For instance, if you're a business that has been running for the past 5 years, what has been your average revenue for the past 5 years? For the past 5 years, on average, how much have you been making as a business? How much have you been spending in terms of cost? And then what has been your profit as a... They'll have to understand this. This will give them a clear sense of what the future will look like, right, for them. So when I talk about SMEs preparing, right, to absorb these funds, these are some of the things I am talking about, right? Taking the right data and then reporting right on their financials. And also, having the right people to run their business or recruiting the right personnel. Because if you are going to if you are going to get funds, right, then you should have the right people with the right mindset who will work with this money to generate, extra income that will make it viable for these SMEs, right? And as much as possible, try and make the business improve the business continuity so that when you are not around, the business can still run. So when I talk about
continuity thing is a very big issue in our part of the world.
Yes. So it's something that we really have to look at. SMEs
Most businesses are tied to one person.
Exactly.
And the person is no more. Even if you travel out a country for a year, the business will collapse.
Exactly. So when I talk about preparing, these are the things I'm talking about as businesses. We should be able to do that. You should be able to reach out to experts in subject matters. Even concerning finance. The fact that you are SME doesn't mean like you should run the business all knowing. Okay, so when I talk about preparing, they should be able to set up this platform that will help them absorb the capital. Yeah.
John, do you want to weigh in?
Yes, and I want to add that always we're asking SMEs to prepare. One way is to also get finance professionals to help. There are a lot of finance consultants, a lot of financial analysts. You can get them on board to just help you structure your reporting.
Yeah.
Maybe it's possible that over the years you don't have any proper records. Get some of these guys involved. Let them prepare at least 3-year financials for you, because the banks, without any data, they will not be willing to support whatever you are doing. So this is the right time. Once this is coming, this is the right time to get finance professionals to help you restructure your financial statements, your reports and everything. Maybe if you don't have corporate governance, any structure in place, get people involved and lay out a clear structure. If you don't have a business proposal, this is the right time to start writing your business proposal. Don't wait. Otherwise, by the time you wait and you are now writing a proposal, people have already sent it and they are getting the funds. So just get your proposal ready, get everything structured. If it's about the financial issues, get a financial consultant or financial analyst to help you restructure, your reports in a way that suits, some of these, financing requirements. Once you're able to get all these things ready, then once it starts, you're also in to benefit massively.
I want to be even practical with, when we say corporate governance, it looks like something big to these ISMEs. For instance, you are running a business, right? An SME business. And when we talk about corporate governance, we are trying to say that, look, put in place structures that makes it difficult for you to take decisions on your own. Right? So, for instance, you have something we call a board. A board can be any number of people beyond, I think, 3?
2.
Beyond 2.
Yeah.
Yes, beyond 2. But for, better decision making, odd numbers, are preferred for good board structures. So that when we are going left, there's clear that about 2 say we are going left. So there's clear majority and the likes, right? So I think that, okay, reach out to, and we are saying, and on every board, you should have at least like someone with good finance understanding, someone who understands how money moves, right? So you can talk to a friend who you think probably, I think that's our problem, right? We're always looking at the big people, right? You can talk to a friend who did accounting, right? And can help you, who did probably banking and finance, and has a degree around it. It's a first level that they have some understanding of that space. And with the level of business you operate, they can actually help you, right? Exactly. They can be on the board. And if this is someone that you really know, let the person understand what you do and the fact that, from the beginning, it's not going to be rosy like that. Just put in place that structure. Imagine if you're a lender, you have 2 people, someone comes and then same business, but then they just have this structure in place. That alone sends or tells you how serious. They are. And that alone can they can have your bid for such thing. So practically, I think this is a 101 lesson for them. Yeah,
absolutely. I call there's an institution I used to be part of, and anytime we go for a meeting, the secretary, he'll be sitting there looking at our face, we'll be asking, won't you take minutes? So the minutes is in his head. So then one day he says he resigned. So then all the decisions we've taken, there's no record of it.
He's taking it away.
It's always in his head. He remembers. These are just basic things. There was another business I used to assist. And it was more of, initially, yes, he had started as a sole proprietor. But he didn't understand how, when he makes his profit, he shouldn't spend it. Because he told him that, look, in my house, so I tell him that if electricity bill is due, I should say I don't have money when I have money from the company.
my mother's problem.
Exactly. Immediately there's a cost. He's using the money there. You see, at the end of the month, he has no money. He starts afresh. Zero. Which, these are the structures, I guess we are saying that these companies should distinguish the business from themselves. That the fact that I have money in my business doesn't mean I'm rich, so I'm going to buy a new car. I'm going to buy a new this when it doesn't affect the business anyway. But I guess we've made a good call for companies, SMEs, or any other company from with putting in the right measures and institutions or structures in place to ensure that they take good advantage of this. But maybe let me just ask a very simple anticipatory question: that don't you think that these banks, when they enter into the system, they may start discriminating? They'll intend to lend money to, let's say, bigger companies as opposed to smaller companies. Because on the scheme of things, it will look like the bigger, quote unquote, companies would or have a great propensity of making the necessary returns for them to recover their money. Wouldn't that be a fear for the bank? So that if, let's say, John Che, you come with your new business, okay, they've seen your projected cash flows, but there's no real record compared to a company that's been existing for, let's say, for about 30 years, that they can see their exact track record. Wouldn't they start discriminating?
Yes, it's possible that it will happen, and it's likely to happen. But you see, the issue should be more guided by the regulator. The regulator must have an objective of bringing this on board. And I'm sure in the minds of the regulator is maybe thinking of SMEs. Okay, so when it comes, you prioritize the SMEs. You make sure you regulate in such a way that you ensure the banks are giving to the right people that you were targeting.
Okay.
Do you get it? Because if you don't do that, in terms of structures...
So you think that this should be legislated?
Yes.
Or should be in their structure?
It should be regulated.
Okay.
In such a way that... Because you see, the issue is that when it comes to, let's say, systems, everything, the big players will always be on top, or they have well-structured board and everything. And for them, I don't think they struggle with even conventional banking.
Yeah. So
if we really want this to work for our SMEs, then the regulator should be very active. And the guidelines should be in such a way that, there are specific financial models for SMEs, which require that you must give it to these specific, groups of people as far as your lending policies are concerned. And that should, otherwise, the big players will take over, and then whatever we want to get from it, SMEs will continue to suffer with lending. So I feel the regulator must really play a key role in ensuring it gets to the small players, because that's what I feel we want to promote.
Okay.
So practically, right, like we did for the LD ratio tied, cash reserve tied to LD ratio, which was able to show up lending to the private sector significantly between 2024 and up until now when it was revived. These are very practical steps that the regulator can take, right? And not just put it out there, incentivize them to also maybe not necessarily tied to cash reserve this time around, but let's say your lending, your loan book to SMEs probably tied to your tax or something. So you have a tax incentive when you lend to the SME, right? So these are practical steps that the regulator can look at in order not to crowd out the smaller businesses when this non-interest banking model is eventually rolled out. I just wanted to add that to what John said.
Right. I think that if the regulator is listening to us, this is something they must take quite seriously. Other than that, we'll enter into a space where it's just the big businesses who are benefiting from it. Yeah. Then our business, which we are starting, that we need most of this, even to benefit from the expertise and all that, we'll rather be cut out. Then we'll just go back to square one and would have just missed out on everything. Gentlemen, let me take your final words. If the regulator or the government is listening to you, what do you have to say to them on this financing model?
Okay, so I think my last words would be that strongly I've realized that the regulator is really pushing this financing model, and there are clear objectives, and I think the regulator should be very intentional about getting these funds to the SMEs, making sure all the players who sign up to this financing model are getting the money to those that need them, those that really need them. And as my brother said, the use of tax incentive and all kinds of approaches can be adopted to ensure that the monies get to the SMEs, because I think it's high time we support our SMEs to do well as they constitute a larger part, and this is really going to be a cheap source of funds for them, and this will even be better than that fixed rate they have been complaining about, because I think high lending rate is one of the major problems as far as SMEs are concerned. So every policy that is being developed around this area should seriously target our SMEs to make sure they get enough of these funds as these banks are rolled up.
Right, Mark Jordan.
Thank you. So if we have the regulator, government listening, for me, my words to them will be that they've started a great job, and so they should keep up with it. Why? Because the space is a booming one. As of 2024, we had about nearly 3.4 trillion in assets in the Islamic finance space globally. It added about 500 billion. It's projected to hit about 7.5 billion just 2 years from now. And this very significant amount of funds, which we can position well to attract as a country, right? Because, I mean, these are going to come in as FDIs in those space. So really great potentials for us as a country, right? And also for me too, because of the fact that it pushes our SMEs to be formalized, right? And then it helps us and the like. So, and also gives, has the chance to give our SMEs the needed financing, which we've all been advocating for over the years. So it's a great thing that we really have to approach. And then to our SMEs, we've mentioned that we have to really lay down the platform and the foundation to really absorb these funds that are anticipated. So yeah, we look forward to it. Yeah,
absolutely. We all look forward to it. We look forward to how Islamic financing is going to boost our economic growth. Gentlemen, thank you so much for helping us in the conversation this morning. And I've been joined in studio by Mark Jordan Sikanate, who is a senior research associate with Lawrence Africa, and John Che, who's a financial analyst. Gentlemen, thank you so much for your insightful thoughts you have shared with us this morning. And thank you for spending your Saturday morning with us.
Thank you.
Right, and I also must say a very big thank you to everybody who spent their Saturday morning, whether by ear, sight, or sound, for spending your treasured time with us in having a conversation about Islamic financing and how it can benefit our economic growth. We are truly grateful. And I can't end the show without saying a happy birthday to a very good friend of mine, Nancy Thomasina Ejekum Esquire, who I always describe her as a lawyer from just 9 a.m. to 12 noon, and the rest is just soft life. I wish you the best and have a happy birthday. And thank you everybody for joining us. We're hoping that this Islamic financing model will be a success, and it will be a success to benefit our economic growth. I always say that we have just one Ghana, we have just one Africa. We have a decision to make, whether to give up on Ghana or whether to make it better. I choose to make Ghana better, and I hope everybody will join in this train. Thank you, and have a very good weekend. We shall meet again next week. God bless us all.
Z 101.9 FM.